What's up everybody, Jaspreet Singh here, and over the last few days, the Federal Reserve Bank met with the Senate and they met with the House testifying about inflation, what's going on with inflation, what their worries are with the economy, and what they expect to come in the future. And there were some very interesting things because for the first time, Jerome Powell talked about the possibilities of a recession. They talked about inflation not coming down super soon, and they talked about the real concerns that they had. Now, I know I'm a little bit late on this. I apologize for that because the meetings were over the last few days. I've been in LA this whole week doing some interviews. I'm finally back in the office right now. So I just wanted to record this short video to give you an update on what happened this week. That way, then I get all caught up on that this Saturday. So the Federal Reserve Bank met with the House and the Senate, and it was a very unfortunately, political discussion, which, is not very surprising. The left kept saying, actually, if I just break it down, they said 3 Ps. They said that the inflation problem is caused by Putin, the pandemic, and price gouging by big corporations. Now, I'll talk about that, then I'll talk about what the right said, because if you're on one side or the other, you're probably not going to like me either way. I'm just going to be completely honest here with what's going on. So this is what the left said, that they said that the problem that we're having is due to what's going on with Russia, is due to everything with the pandemic, supply chain, and it's due to price gouging because now corporations are doing all this corporate greed. They just keep raising the prices and they need to lower their prices. The right side of the political spectrum said it's Biden. They said Biden is spending too much money. They said that Biden's stimulus programs are causing this. And then you had some people talk about how the Fed is contributing to that, which, okay, is not wrong. That's finally what we're talking about. So let's talk about what actually caused inflation, and let's discuss this. Inflation comes from the word inflate. It means increasing the monetary supply. So when you increase inflation without increasing the wealth, you devalue each individual dollar. I made a video just last week talking about the real causes of inflation, what causes inflation. So over the last number of years, when the Fed was printing trillions of dollars and the government was spending trillions of dollars, that injected a huge chunk of our current economic supply of dollars into our economy while we were not producing anything. The economy shut down, so no wealth is being produced. However, trillions of dollars of money is being produced. So when you print money without wealth, the value of each individual dollar goes down. This is what inflation is by definition. Now, when you print this money, nothing's being produced and people have money and businesses have money. Now you go to the store and you start spending money, you start buying things, but nothing's being produced. What happens? Well, now the store runs out of products and the manufacturers get backlogged because now the manufacturers aren't producing anything, but there's a huge need for products. This causes the price of things to go up because now they have to go out and produce more things. They start to see, oh my God, we need more money in order to buy raw materials. We need to pay more money for cotton. We need to pay more money for this commodity, that commodity, more for metals. And so now the manufacturers have to pay more money in addition to higher costs for labor to produce more products. Then they ship this product from the manufacturer to the wholesaler and they realize, oh no, the truck driving cost is more. Truck drivers want more money. The gas is more expensive, so it costs more money to ship it from one place to the other. And then it costs more money to get it from the warehouse to the retailer. And then the retail workers want more money, which means now the product at the store is going to cost more money. So you have all these things going on, which ultimately comes back to the cause of inflation, which is the money printing. And that is the root cause. And so now, you talk about Putin. You talk about things going on with the pandemic. These things don't cause inflation, although they can cause temporary price disruptions. By definition, inflation is when you inflate the monetary supply. When you have a war going on, that can cause a temporary price disruption. When you have issues like a manufacturing plant getting shut down, that causes a temporary price disruption. It causes a temporary supply chain issue. However, the actual inflation, the devaluation of the dollar comes to the printing of money and the spending of money that you don't have. And this now goes to the government and the Fed, because now when the government spends trillions of dollars that they don't have on whatever programs you want, you could put any name in there. When the government spends money they don't have, it has to be paid for by somebody. It has to come from taxes in some way, shape, or form. So either, because that's the only way the government gets their money, they get their money from taxes. So either the government can raise your taxes, but that's going to make a lot of people angry. If they don't raise your taxes, they can cut your benefits, they can cut Social Security, they can cut welfare, they can cut other programs and entitlements that the government gives out, which again is going to make people angry. Or they can do it through inflation, which means the government then works with the Fed to print money. Then the government can just spend money on command. You feel like you're getting something for free, right? Maybe it's a stimulus check, maybe a business is getting a huge loan, maybe they're giving out some sort of welfare, whatever it is. Whether it's to corporations or people, it does not matter. When the government spends money it doesn't have, somebody has to pay for it. I mean, it's just like anything else. If you go and spend money you don't have at the Gucci store, somebody's got to pay for it. Your credit card company's going to pay for it initially, and then you got to pay off your credit card company. And if you don't have any money, well, then your credit card company is still on the hook. They still got to give Gucci the money, and then your credit card company is going to come after you, right? Somebody always has to pay for it. The most expensive kind of money is free money, because now when the government spends money they don't have, that creates more inflation, and that affects the price of everything, because now the prices of things go up. And this is where you had a lot of political discussion about, oh, Biden caused this. It's all because of Biden. Look, yes, President Biden's administration did contribute to inflation. They printed trillions of dollars in the last stimulus package. There's other things going on which are excessive spending, but it wasn't just Biden. I mean, if you go back to the Trump administration as well, President Trump in 2019, we were in the strongest economy of all time, started cutting interest rates. He put a lot of pressure on the Federal Reserve Bank to stimulate, to cut interest rates, produce more inflation to help the economy grow faster. And then we saw the first round of stimulus checks and the PPP program during the Trump administration. So, honestly, it doesn't matter if you're right or left. All politicians play politics, okay? And so this is where, I really hate getting into the political side of things, because at the end of the day, I feel like they're all corrupt. So this is where you want to be smart with your money, because when it came down to the actual, now what the Federal Reserve Bank said about inflation and money and the economy, for the first time, Jerome Powell said that bringing inflation down to where they want it to be is going to be, quote, very challenging. It's the first time he said that. Up until now, he's been saying that it's very doable. The Fed can do it with a soft landing, meaning without causing any sort of economic pain. But then he said that it's going to be very challenging. And then he also said that a recession is, quote, possible. So you can start to see the change in tone. He did say that it's still not likely that we're going to enter a recession, but he finally said that it's possible. So you're starting to see a change in tone on the Federal Reserve Bank side. You can start to see that they are starting to get more worried about inflation. They are starting to get more worried about the economy, because we've been seeing what's going on with the tech sector. We've been seeing what's been going on with the mortgage sector. We've been seeing what's been going on in the retail sector, because in all three of those sectors, people have been losing their jobs. People have been getting laid off. Companies have been going under. We've seen some companies like Revlon declare bankruptcy. We've seen a number of companies in the tech sector do massive layoffs, do hiring freezes. We've been seeing massive layoffs in the mortgage industry. So that's what's been going on one hand. Now, before I get into what you need to know, what you need to be aware of, if you do want to stay up to date on what's happening on the top finance and business news like this, without all the sensationalism, without all the headlines, without all the politics, you got to check out Market Briefs. It is a completely free financial newsletter that I created, where our team works to break down what's happening in the top finance and business news. And the reason why I say there's no of that sensationalism, because it's a simple email. You can read it in less than 5 minutes every morning. And within the email, it's going to break down what's happening in the stock market, the real estate market, the crypto market, inflation, and the global economy. And that's that. I mean, we literally just break down what's happening. That way you are aware without all the political bias, all that. I try to stay away from that even on this channel. I don't want to talk about all that, because my goal is to help you be better with your money. I know some people really don't like that, but I don't make these videos to get you to like me. I make these videos for you to be financially educated, for you to make better decisions with your money. So if you want to join Market Briefs and start getting these free emails, it's completely free. I'll put the link to how you can do it down in the description below. Now, when we talk about what you need to do, the reality is recessions, market crashes make more millionaires than any other time. And the reason why is because some assets go on sale, meaning you will find distressed assets, distressed stocks, distressed crypto, distressed real estate. And this is where you have to just know how to find the opportunity and know what it is that you want to invest in. Obviously, crypto and stocks are much more liquid, and so you can find opportunity there kind of sooner, because things like the real estate market are much slower. Right now, the real estate market is still going up. even though stocks and crypto have been getting hit very hard. So this is where you got to know what it is that you want to invest in and have cash to be able to invest. So on the what it is that you want to invest in, you want to be already doing this research right now. Do not wait until you see markets drop huge and then you start buying or start looking for what to buy. I mean, buying when prices are low are the best time to buy, but you want to know what it is that you want to buy before people start losing their minds. So this is where you want to do your financial education, start doing your research of what it is that you want to buy. If you don't want to spend all that time researching individual companies, look at ETFs. You can look at ETFs to give you exposure to things like the S&P 500. You can look at ETFs to give you exposure to dividends, high dividend paying companies. You can look at ETFs to give you exposure to emerging markets if you are worried about the long-term health of the United States economy, if you're worried about the currency. I mean, you can create different types of diversification. If you like crypto, if you believe in it, again, I'm not telling you what to invest in, but if you like crypto, do your research. If you see a deal, then there's an opportunity for you to come in and buy. With real estate, again, real estate has a much longer lag time. And the best indicator for where real estate's going to be is going to be based off of what the Fed does, because the Fed affects asset prices. If the Fed keeps raising interest rates for the next 12 months, you can bet real estate prices will have to correct. And it's a matter of really just algebra or arithmetic, because if costs go up significantly, if they go from mortgage rates at 2.5% last year to 6% today, and if we hit 10 or 11% next year, demand will have to go down. I mean, who can afford? You're not going to see the same people affording homes next year the way that they could afford it this year or last year. So demand would naturally have to go down, and if supply keeps going up, well, then prices would have to go down. I mean, it's math at the end of the day. So those are the things that you want to be aware of. But the key now to find these opportunities is you don't want to panic, you don't want to get emotional, you want to make financial decisions, because things can change. Things can change very quickly. If the Fed reverses course and they start cutting interest rates, they start creating more inflation, well, then things can reverse very quickly, and that could change what's going on in the economy. It can change what's going on with inflation. So this is where, the whole idea, what I try to do is not to tell you what to do, but to tell you where to look and to understand how to make better decisions with your money. That's my goal. My goal is to help you be more financially educated. That way you can find the opportunity, make the right decision for you, because what's right for me isn't necessarily right for you. You have a different risk tolerance than me. You have a different goal than me. You're going to have a different return that you're trying to get than I am. So this is where you want to be able to do the research yourself. But the key is you got to be able to stay calm and be able to do that research, because when people are going crazy, when people are panicking and fearful, it creates a lot of bad decisions. No one ever makes a good decision out of fear. No one ever makes a smart financial decision out of panic. And you want to be the one that's now calm, looking for opportunities, but making sure that the opportunity is a good one before that opportunity arises. You want to be preparing when times are okay, when times are good. And no, you're probably thinking, but Jaspreet, times are already bad. Look, times are still okay right now. Spend now researching, analyzing, preparing, put some cash aside. If you don't want to hold cash, you can also hold physical gold. But then you put some money aside that we look for opportunities. When the opportunity arises, then you can take advantage of it. If that opportunity does not arise, well, all you have is a big bank account that you can use for something else in the future. So it's all about preparing, doing the research for an opportunity that may come your way. And, it's also not trying to perfectly time the market, which is why you also want to do dollar cost averaging if you want to get exposure to the market over the long term. But if you want to be able to find the best opportunities, that means be prepared when times are okay, to take advantage of times where they're not so good. If you enjoyed this video and you want to see why we might be entering a once-in-a-lifetime opportunity to build wealth and what you can do to capitalize on it, I already made a video covering it, and you can watch it by clicking that button right over there. Thank you for watching, and as always, keep hustling. When the 2020 pandemic happened, that was when the stock market and cryptocurrency was the biggest opportunity. Next time,